Hey everybody, Gary with Basecamp Trading. Take a look at how we were trading crude this afternoon. Took a couple trades in crude. This is our 30-minute chart. And you can see crude was in an uptrend. We're making higher highs, higher lows. And right in here was lunchtime. We kind of consolidated into lunch. And then as we were in lunch, we actually had what looked like a good setup on the Renko chart. And we're actually going to look at two different trades. One was actually a loser, which is part of trading. You know, we take losses. I take losses just like anybody else. And then we had this really nice triggered bull flag that turned into a really good winner. And that's exactly what happened. We were pushing up. At that time when we entered on the Renko chart and took a loss, this bar was way up here. This was looking like a really bullish bar. It looked like it was opening at the bottom, closing near the top. But again, that's why we wait for the bar to close. We ended up pulling back on here. But again, that's why we wait for the bar to close. That's okay. It just set up this doji right here, which also set up a bull flag, and then we did get a nice trigger bar that triggered this to the upside. This was the ideal trigger bar for a bull or bear flag. This opened at the bottom, closed right near the top, so a really nice trigger bar on the next one. And went up to our target. We had a target up there at 30.62, and we went up and tagged it. Again, Renko's our primary trading chart, and this was where this was all occurring. And right here, we had a push up. We broke out of the cloud with a push to the upside. Then we pulled back into our moving averages. We had a wick off the 50 right here. Did not take this. Momentum was still not correct at this point. The fast line and the slow line had crossed below the zero line on momentum. We don't want to take a trade to the upside when momentum is negative. But then we pushed up, pulled back a little bit, and then we set up the perfect reset. We had a fast and slow line zero touch off the 50, all the moving averages in alignment, price above the smooth 50, above the cloud, 50 SMA above the smooth 50, 34 EMA above the 50 SMA, 18 EMA above the 34. Looked like a really good setup. We like slow line zero touches. In general, they're high probability trades. Nothing guaranteed, of course, but in general, these are high probability trades. So we took this entry right here, and then 5-bar rule took us out. The 5-bar rule is that when we enter a trade, we need to have 5 bars in our direction so that we can hit our first target, because each bar is 2 ticks. So we need to go 5 bars, get 10 ticks to hit our first target before we get a reversal bar. Well, that didn't happen. We ended up getting a reversal bar right here and ended up taking a 4-tick loss. And, hey, that's okay. That's why we have the 5-bar rule. When we enter, we have a 10 to 12 tick stop loss. If we come up here and we get a reversal bar inside that first 5 bars, probabilities are that our entry was wrong. It's not going to work out, and it's much better to go ahead and take a 4-tick stop than let this pull all the way back down here and give us a 12-tick stop out. I don't need 12 ticks to the downside against me to realize I'm wrong. I'm perfectly fine with being wrong at minus 4 ticks, and that's exactly what happened. We got the reversal bar, pulled back. It would have stopped us out for a max loss if we didn't go ahead and take the 5-bar rule. So, worst case scenario, this would have ended up being a wick off the 50 back the other way. We get back in, so not a big deal. Like I said, I don't have to take a $120 per contract loss to prove I'm wrong. I'm perfectly I'm perfectly fine being proven wrong at minus $40 per contract. Like I said, I don't need to be minus $120 per contract to realize I'm wrong. So, we pulled back, wicked off the smooth 50 right here. Things were just a little bit out of alignment, but right here is where we were triggering that second bull flag and on the 30-minute chart. And that second bull flag was being triggered by a really, really bullish bar. Not everything in perfect alignment at this point. However, we still had momentum on our side, still above the clouds, still above the smooth 50. Moving averages slightly out of alignment right here, but there's a wick out of the cloud, off the moving averages. Trend to Pro 2.0 turned bullish on the next candle, and we were triggering a 30-minute bull flag with a strong trigger bar. So we had 30-minute confirmation, wick out of the cloud, and it was a nice push to the upside. Our upside target for the day was 39.62. The high of this bar ended up being 39.70, but that's okay. You know, we pulled back significantly after that. Took profits just a little bit in front of our target, and we wanted to make sure we got filled. Our entry was off of this bar, which was 39.11, and we had also had some previous resistance right here at 39.12. So as we were triggering that 30-minute bull flag that was triggering at 39.12, our bar was triggering basically the same place. So we were breaking previous resistance, triggering a 30-minute bull flag, wick out of the cloud. So we had some decent confirmation. You know, momentum was in our favor. Again, the only thing wrong with this trade is moving averages were slightly out of alignment right there. And we pushed up with really very little heat, little pullback right there, but right up to target. We, again, nailed target at 39.62, pushed just a little higher beyond that, but pulled back right after that, so perfectly fine. Taking profits up there, again, you know, in at 39.12, out at 39.62, $500 per contract. No complaint there at all. So nice push to the upside on a 30-minute bull flag in crude oil.